What is going on, everyone? This is Jordan with your weekly Forex forecast. This is our first weekly Forex, and we are going to be releasing these every Saturday for you. It is super important to prepare for the week ahead. Super important to have a trading plan going into the week. The weekend is the best time to take a cup of coffee, or in this case, a cup of tea. It's really important when the markets are closed to go ahead and just take some time, review what you've done, review the past week, and plan ahead for the week so that you have a plan of attack going into the next week. Otherwise, as soon as the market's open, you're just going to be making a mistake. All right, you have to trade smarter. Really important. All right, let's kick this off together right now. We're going to start with the DXY. You're looking at here in this blue box the past week of trading. You can see that price held this 97 area. And that's pretty important. From 97 to 96.5 is a pretty important level. If that breaks, there's a chance that we're going to go down and test down over here below 96 and then ultimately 95. If that breaks, there is a big, enormous, probably multi-year, several year trend change on the dollar index. But right now, that's not what's happening. Right now, we just tested this minor support. Price bounced off it this whole week and is now closing towards the top of the weekly high. We have next week, this is really important, we have next week the Federal Reserve meeting for their interest rate statement. It is widely expected they're going to cut 25 basis points. And more importantly, this is probably going to be the last cut for a while. I believe that the Federal Reserve is going to go ahead and look to implement some fiscal stimulus now that they've cut the rates down. Introducing liquidity into the markets is going to be more effective. So it looks like the dollar was reacting this week to that. Now, if the Fed signals that this was their last cut, that they're now going to be pausing for a while, or if they go even with stronger language that this was the last cut of this and they call it mid-cycle, the dollar is probably going to continue to strengthen, and we're going to go up over the next couple of weeks or a lot sooner days and test this 99.5 area to see whether or not we're able to break out above that or if we're rejected once again. Now, going into the meeting, it's also really important to note that usually price tends to stay somewhat flat, right? You don't want to really be taking any new positions going in. We've seen the dollar strengthen across the board this week, and this is indicative of the meeting next week and what the market is pricing in and expecting to happen. Now, the meeting is on Wednesday. Let's take a look at the calendar of the week ahead and all the important events. We have on Wednesday, for anyone who is trading the Canadian dollar, we do have the rate statement coming out of the Bank of Canada, which is expected to remain the same. And then later in the afternoon at 2 o'clock Eastern time, we have the FOMC statement. We're expecting that 25 basis point rate cut, and then the press conference. Now, it's really important, just keep this in your head. I will do a video if there's any interest. Now, what usually happens is after the rate statement, which is always at 2 o'clock Eastern time, you will see price react for the next 20 minutes. And then usually about 10 minutes before the press conference starts, you'll see price then come off a little bit in whichever way it had started trading. During the meeting, you will see price, as the meeting starts, continue back towards that initial trend initially, and then again, it'll kind of come off. And the reason price comes off again, now the reason it comes off in that moment is because the market is waiting to see whether there are any surprises during the press conference, specifically during the question and answer period from Fed Chairman Powell. If anything is said, then the market will react accordingly. At the very close of the press conference, if nothing was introduced that threw the market off, it then normally continues during the direction of that initial impulse that happened after the statement was released. That's really important to understand. This pattern occurs over and over again, and there's good reason for it. The initial reaction occurred from whatever the Fed decided to do, whatever their move was, right? Right before the press conference, some profits are taken. People wait for the press conference to see what the chairman's going to say. During the question and answer, this is when surprises could come out. And if nothing does come out that is a surprise to the markets, you will then see positions continue back towards that initial move, which will then normally become a multi-day or week trend. We have later that night also a monetary policy statement from the Bank of Japan. We do not expect anything new there. Bigger news will be on Thursday out of China. This will directly affect the Australian dollar. We have the PMI, how manufacturing is doing. And then the next morning out of the US, we also have the ISM manufacturing PMI. Last month, it did show a contraction below 50. It showed a 47.8. If that shows again below 50, that's going to signal that the US economy could be slowing down. Another thing to keep an eye on will be the averagely hour earnings. Now let's take a look at the euro versus the dollar. The euro looking here at what occurred over the past week in this blue box. We could see that price initially took out the high of the previous week on Monday and then traded down all week, closing now at the bottom of the weekly range. This is a strong indication of a continuation of price movement into the following week. Next week, we do have the Federal Reserve meeting occurring, and the US dollar seems to be strengthening into that as it is expected to be the last 25 basis point cut for a while. We do see that the Euro US dollar is still holding this uptrend. I do believe we're going to get a trend change next week. I'm not going to be looking to take a position before FOMC meeting on Wednesday. We are going to look to day trade after the meeting and after the press conference, which should be a fantastic day of trading. But right now, we need to stand aside. We're going to drop down and look at the 12-hour. Again, it looks like the trend is about to roll over negative. We are closing at the low or towards the low of the weekly range. That is definitely a bearish indicator, but price has been dropping. It makes no sense chasing price into the FOMC meeting because normally what happens the day before and the day of the meeting is price will trade in a very narrow sideways range. There does not seem to be much of an edge right now, and there will not be until after the FOMC meeting next week. I'm definitely standing aside right now, just waiting for a better entry, for a better setup, for a little bit better of development on this trade. Moving on to the euro Japanese yen. Over this past week, this pair has consolidated pretty nicely, right? In a pretty tight range of about almost 100 pips. Now you could see that it is closing towards the bottom of the weekly range. The trend on the daily is definitely still positive, and this is setting up to be a possible bull flag that could break out positive here. We see that the trend CCI is negative in an uptrend. This is saying that price momentum has currently been a little bit oversold in an uptrend. This is giving us the opportunity to look for some longs, dropping down until the 12-hour to look for a little bit of entry, and then now also the 8-hour time frame. It looks okay. It's consolidating pretty nicely into this bull flag, but it's not really giving me a sense that this is a trade that is providing any type of momentum that I want to chase or follow. It seems to me that we have the euro US dollar in play here, and it does look like the dollar, as we've seen on the DXY, is looking to strengthen. That could be weighing down this pair a little bit. So being that it looks a little bit shaky or unknown, I am standing on the side. We will keep watching that pair to see what develops and whether or not we do break out of this, what looks to be some type of consolidation. Now, the US dollar Japanese yen, on the other hand, and it's really good to have just looked at that euro Japanese yen pair, because now when you're looking at the dollar Japanese yen pair, you can see the difference. You can see that it is also consolidating in an uptrend. The true trend is positive. We're in an uptrend. This past week, these past 5 days, price is consolidated, but it's closing towards the upper end of this channel of this week. And that signifies to me that, being that we're in an uptrend, price is consolidating, that it is looking to move higher, and we do see some signs that the dollar may be looking to strengthen here. This is a green light. This is a pair that I want to be looking to trade next week. I do want to look down first at the 12-hour with you, and then also at the 8-hour. And although this does look like that it's looking to break out above here, because of the FOMC again meeting next week, I do not want to be entering into a new trade before that takes place. We'll be looking to enter trades Wednesday afternoon and Thursday and possibly Friday. This is definitely a green light on the watch list, but I would rather see this breakout to new highs over here. And then I would look to get in not on that breakout, unless that occurred after the meeting, directly after the meeting. But any breakout before the meeting, I would stand aside. I'd rather wait to get in after the breakout occurs. And then the entry CCI allows for an opportunity to get into the trade towards the trend. This is definitely a currency pair that we want to be watching. We're going to follow together. It looks like it is going to be providing a nice move. Now, the Bank of Canada does have a rate policy statement coming on Wednesday morning, and we could see that during this week. Well, this is interesting because we've seen the dollar strengthening against most pairs this week. However, we see on the US dollar, Canadian dollar, that it is the Canadian dollar that has been stronger than the US dollar. This is probably the only pair this week that has been stronger than the US dollar. You could see that the Canadian dollar is breaking down into this downtrend and it's closing near the lows. That's interesting. I really don't know what to make of it, because if the dollar is strengthening, the Canadian dollar is strengthening versus the US dollar. It's such a wild card. The Bank of Canada is not expected to make any type of rate change next week, but it is more about what they're going to signal as far as their upcoming policy. So this is definitely a currency pair that is in play. There is currently trading with strong momentum in this downtrend. So there is no opportunity for me to get in. There is actually the only opportunity to get in this trade. And if we were looking to trade it, we would drop down to the 12-hour, was during this trend change right over here. And then you had the first pullback where the entry CCI was overbought in a downtrend. And then as the trend resumed, you would have bought into that trade. You would have had another pullback over here to enter. But as far as this coming on our radar right now, there's no way for us to get into this trade. Again, this is best to stand aside, wait to after Wednesday, and see how this pair reacts. If the Canadian dollar come Wednesday afternoon is showing strength versus the US dollar, well, that's a strong signal that we're going to want to find a way to get into this trend and ride it down further. And adversely, that could also be the end of this current move. So we need to watch out and see what is happening here. The US dollar versus the Swiss franc is also showing a lot of dollar strength. It is closing towards the high of the weekly range right now, and this should continue. It looks clearly like this pair is trying to make a move. I would stand aside until we get above this $1.00338 level. At that point, it would look like, obviously, that we're going to go up and test the high over here, a couple hundred pips higher. But what I would be looking to do is first wait to see whether or not it could break above this resistance here, wait for that resistance to be tested, and then at that point, we could look to go ahead and find a trade. So what I'm going to do here is I'm going to move this. I'm going to move this to a watch because there is no way to get into this trade right now. It is, if anything, what could happen is that off of this resistance up here, we could wait for a trend change to go negative to see whether or not this resistance holds. This week, we need to stand aside on the US dollar, Swiss franc. There is no opportunity. We're going to watch, the first thing we're going to watch is to see what happens at this resistance. Is the dollar so strong next week after the FOMC that it breaks through? And at that point, we would look for a test of that breakout to get long. Otherwise, we're going to see whether or not this resistance does reject price. And then at that point, that will be a fantastic place to go ahead and get short. British pound versus the US dollar. We do see, again, the dollar is having its way with the pound this week. The pound is closing towards the lower end of this weekly range, but we have seen this enormous 800 pip move upward in the pound over these past couple of weeks. And considering the height of that move, the pound is consolidating towards the upper bound of that move very nicely. That it looks like it is extremely positive and could be quite bullish. Obviously, this is largely dependent on politics and what happens as far as the Brexit is concerned. So without having to follow the news on a day-to-day basis, we can follow the chart, which is pricing it all in order for us to get into this trade. Right now, what we could say about this currency pair is that it definitely is in an uptrend. Again, we have this huge 800 pip move. It is consolidating the move really nicely and healthy. If you are short this pair, you are on the wrong side of the market. Other than that, we want to stand aside on this pair and wait to see what develops next week. This is really fantastic to be taking this time to do this with you today, because planning for the week ahead, it's really important to understand and know that next week is a big high-risk news event with the FOMC meeting on Wednesday. Normally what happens going into the FOMC meeting, price does tend to trade in a narrower range. It is smart to wait until after the meeting to find out what direction to be trading with, and then find our best possible entries to get in towards that direction. Those moves later in the week should wind up being some pretty nice moves. We can make some pretty nice profits if we trade this with patience and with intelligence. All right, moving over to the Australian dollar, US dollar. We see this nice channel developing here. Let me help you see that. All right, you can see that pretty clearly. And you do see that although price is trading towards the lower end of this weekly range, compared to the other pairs, except for the Canadian dollar, that the Australian dollar is showing a little bit of strength against the US dollar today. Why most pairs today are definitely trading down compared to the dollar, the Australian dollar looks like it's barely going to close positive today. You can see that it is holding this support of the lowest support of this trend channel. If there's a break of this trend channel, you're going to see also the true trends pick that up and turn negative at exactly the same time. That will be the time to get short. That will be a nice short, because we would be then looking to test down here, which is more than a couple of hundred pips away. That will also leave us a nice risk to reward ratio. This is a pair to green light. This is a pair to watch because it looks like it is setting up nicely. At the same time, we are in an uptrend on this pair. You can see the true trend is positive. You can see that price is so far holding this support. And if price is able to make a higher high than the previous bar, then we do have price action taking us into the trade. So both ways, this pair, the Australian dollar, US dollar, is in play. It's in play for a long, and it's in play for a possible short. It is at a critical junction and an excellent spot to be watching to get in. We will follow up on this pair early and later in next week. British pound versus the Japanese yen. We could see that we are in a strong uptrend as the British pound has taken about 1100 pip move against the Japanese yen in the past couple of weeks. And it is also consolidating very nicely towards the top of that range. It looks like that this bullish trend is set to continue. Again, if you are short this pair, you are just on the wrong side of the trade. The true trend positive, the entry CCI showing it is oversold in an uptrend. We are looking to get long this pair. Let's drop down to the 12-hour, see what it is revealing to us. Same thing, we're in this uptrend. You can see that the uptrend started here. Beautiful move. We're just waiting now. Question remains, are we going to wait for this pair to break out to new highs, look for the retest of resistance, which should then be support, see if it holds and then get long, or are we going to look for an earlier entry to get in with a stop down here? Being that we do have some big news events happening next week, at this point I am going to take the option of staying on the sidelines on this pair and just waiting for more to develop. We do want to keep watching this because this is shaping up to be a fantastic trade. To have this bull flag developing, this nice tight consolidation at the top of this range after this large move is extraordinarily healthy and does signal that what could be expected is a continuation of that move. We'll find out. We will see. And now we're going to look at the Australian dollar, Japanese yen. This pair does also look to be trading nicely. It is consolidating above this breakout over here, and it is holding it very nicely. It looks like, now this looks like one of the pairs we've noticed against the US dollar. The Australian dollar was showing a little bit of strength today. Therefore, compared to the other pairs, the Australian dollar might be the play against the Japanese yen. This is largely dependent on many factors, including what happens next week with the Chinese PMI out on Thursday. Getting in before then, I don't know how much sense that makes because the Australian dollar is so heavily tied to the Chinese economy. Might want to wait and see what happens. Again, we're looking to get into really high probability setups. We're looking for solid trades that offer a good entry, a good risk to reward. We are looking for trades that are going to make us money, giving us the lowest risk. Right now, there's just some uncertainty going into next week. We have the FOMC meeting. We have the Chinese PMI. Right now is a smart time just to wait a little bit, wait for a better entry. This is definitely one we want a green light because what seems to be happening is, and probably going into the end of next month when President Trump is expected to meet Premier Xi in Chile, it looks like you're going to see a lot of positive comments about phase one of the trade deal. That's going to be highly supportive of the Australian dollar, and it's also going to be negative on the Japanese yen. So this is a pair that we're going to definitely want to watch. Hopefully we could get in and take some solid green pips out of this one. But right now we want to stand on the side. This is a really important weekly Forex forecast that we went over today. Going over the charts is really so enjoyable. It's really crucial for planning the week ahead. What we did notice today by looking at what is happening, getting a feel for how the market is responding to what's going on and what's preparing for next week, that the best position right now is just to be waiting it out a few more days. Traders often feel like they need to be in the market, that they should be in the market. This leads to overtrading. This leads to a loss of money. One of the smartest things you can do is just stand aside until things develop. The market's always going through phases of consolidation and then expansion. Right now, we're in a consolidation phase. You could see from all these pairs we looked at, they're consolidating. And also what that means is that that's probably most likely going to continue through next Wednesday, right? So Wednesday afternoon will be a fantastic opportunity to be day trading. And then Wednesday evening possibly, and Thursday will be the time, or if not on Friday, to actually get into some nice longer term positions that could offer some really nice moves. But right now, you want to be standing aside. If you were able to watch this video and really understand that, then that makes me really happy. Have a great weekend. Have a fantastic week ahead, and I'll talk to you soon.